Okay, so we're recording another shiny gold trade. This one is actually from ES Coaching from August of 2024. It's on Google. I guess GOOGL. I know there's GOOG, and they're basically the same. So this is on the first candle of July 11th, 2024. And Gary Williams already did a video on this, but I'm going to just do my own because, well, this is just my own. Um, so if you look at this one, um, let's go ahead and we'll lock this date to all the charts, and we will pull up the comp and we'll see what's going on there on 7-Eleven. So we have 1, 2, 3, 4. We got 4 of 4 here. Actually, probably not this one crossing. In the write-up, they just said stock RSI, MACD, and DM. And then if you look at the daily, actually, we got 1, 2, 3, 4. We got straight line information on the daily as well. So that's big. Let's go back to Google, or I guess it's Alphabet, whatever. Um, so if we look at this, the person that wrote the report up, they said red and doji on this weekly. That seems, well, Gary agreed, and it makes sense to me. This is, yeah, red and then doji. If you go to the 233, you have, yeah, I think the write-up had a couple of errors, but it had the Christmas cross, the stock RSI, directional movement. I mean, I think that's pretty darn close. I think that could definitely count. Let's go to these two larger charts, the 3-day. We have the stock RSI, we have the MACD, we have a trigger fired right here. There's also a bearish divergence on the stock RSI, actually. And then on the daily, you have the Christmas cross. So I'm seeing what else they wrote. They actually had top Bollinger Band, but that's not right. This didn't touch. Maybe the top wick, but you don't count. Actually, the top wick didn't even touch it. So you don't count that. So you'd say that Christmas cross, stock RSI, another bearish divergence. This is higher here and this is lower. Another bearish divergence on the stock RSI. You have the MACD and directional movement, right? Or trigger fired, either one. So called that a trade. If you look at the predictive paragraph, I'll skip the third one. On the 3-day candle, it may pause briefly at the 233s, flattening 21, which is basically where it's at. It's actually closed underneath the 21 right here, just barely under, but a pause right here. That makes sense. It could fall to the 233s, rising 34. You may need to get out there. It may continue. The daily is rising 21, where it may pause. You may need to get out there. I think you could probably include the 3 days 13 here. And so there were some timing issues on their third one. So what did they buy? I'm not sure sorry, looking here, which strike price they purchased. But we'll just go forward from here. 1, 2. So they said, actually, the 7-hour rule not observed, 5+ hard pieces of hard support. So we'll go to the 3 candle rule. So at this point, it really has moved sideways, which is interesting. Like, it's actually a tiny bit higher because the price of the decision was 185.88, and it's a dollar and a penny higher than that. But they continued. So continue. Oh yeah. So as far as exit criteria, you have the auto wave line. Stock RSI is less than 20. It's on the bottom wick section of the 34, and there's a reversal here. Nothing on the 3-day or the daily. They said continue staying in, go forward. Still sideways of note on the 5th candle. Auto wave line 34. Stock RSI is less than 20. I think actually there's probably two because it's crossing up also. 21. I'm wondering if I'm doing this just actually. Oh, that was the 2nd candle. Okay, hello. Let's move forward. There we go. So we have the auto wave line right here because that previous one, the auto wave line was too far back to count. So now we have auto wave line. We have the 34. This is less than 20. Yeah. 21 bottom wick. Nothing on the 3-day. Could have said continuation right here. Yes. Okay, so we'll go to the 2nd candle on the 16th. Auto wave line. The writer wrote doji, and Gary said that's not a doji. Open close. Yeah, it's 30 cents off, but I guess the size, he's not going to count that as a doji. Fine. Stock size less than 20. Still have continuation there. You have the 21 here. Yeah, continuation on both of these staying. So we'll go to the 17th on the 1st, Wednesday morning. Auto wave line, the 55, the bottom Bollinger Band less than 20 here. The trigger is cocked. And then he actually said, Gary said, since the bottom Bollinger Band and the 55 are laminated, they should count as one thing, not as two. So that's actually kind of helpful. I'm not sure I really knew that was a rule. On the daily, you have the auto wave line in the 34. Continuation still, and none on the 3-day. For some reason, they didn't count the 13, but whatever. Expanding 233, bottom Bollinger Band, continuation, right, and staying. So the 2nd candle on the 17th, we have the auto wave line, bottom Bollinger Band, doji. I'm not sure if maybe he said that's not a doji. Who knows? Less than 20. Trigger cocked. Auto wave line 34. None. Continuation still. Boom. Boom. Yes. Whoops. Okay, so we will go to the 18th. One more candle. See what happens there. Okay, we have auto wave line. You have the bottom Bollinger Band, stock RSI is less than 20. We're actually below this 89. I think, I guess by the rules, maybe that doesn't count, but I could see a magnetic pull higher on that one. But I guess that still be laminated with the bottom Bollinger Band, so I guess that would count. So yeah, bottom Bollinger Band, the auto wave line, less than 20. Cocked, continuation. Yeah, the 89. Yep, the 89. The daily, there's the auto wave line. There's the 55. Less than 20. This is actually cocked. Nothing here. There is continuation, and what the person said is from here, I don't see it continuing down in the few days before earnings, because earnings, I guess, were maybe the following week. I actually don't know when the earnings were. I know he probably wrote it out, and I just can't. Earnings are on the 23rd. So yeah, the next week, like kind of like on Tuesday, so only a few days. And so he said he's exiting right there. Gary Williams said, excellent judgment here. What you have to do here is forward chart read. And so exit right there. So he said his evaluation was gold. He was the person said he was a little off on how long the initial pause in the 233's 21 would be, but otherwise believe everything was all right. And Gary just said that some of the evidence that he claimed was a little bit off. I think just some of the write-ups. I think this person had been it had been a while since he'd done ES, and said 2021, and this was given 3 years later or whatever. But Gary also did say that the things that the person made errors with were in place back then. So it was a gold entry. There were just a few errors. The middle shiny gold, he remained in for the correct amount of time, I believe for the correct reasons, and the exit was shiny gold. He believes that was the correct exit point. He bought, there was a 78% gain and actually on the puts, and he sold calls for a $5 gain. So sold the calls for 10.75 and bought them back for 5.75. So if I go back to the beginning of this trade, these are things that kind of are challenging for me. Okay. I guess I didn't not quite sure what happened there. Come on, come on, come on, come on. Hello. Okay, right there. That's so if we just watch this, like that's some solid evidence to move down. But two, three, four, five candles, and it had not moved. It actually was a dollar higher. So those options would have lost some time because they probably didn't buy very many weeks, very much time with the expiration date. And I really don't know what options he purchased. It doesn't really matter for the purposes of this review, I don't think. But would I've gotten out of trades in this kind of situation before. That didn't go, especially when you look at this. This is rising above here. This is rising right here. It was kind of bopping along this 34. Um, these things are pushing down, and so that's challenging. It did end up moving, and very solid trade. I bet they probably could have purchased less time and had a much better return. But regardless, that is it. All right.